Next is the last session of the day, which is Evolution of Indian Loyalty Programs, New Innovations and the Road Ahead, which is moderated by Mr. Rahul Khanna, MD Canaan Partners. Joining him, we have Mr. Manish Dureja, VP Marketing, Products and Merchandising from Jet Airways, Mr. Vikas Chaudhary, COO and CFO EMEA India. Our next panelist is Mr. MS Ashok, CEO Accentiv. And completing the panel, we have Mr. Abhijeet Vijayvergiya, Head of India Sales, Capillary Technology.
Thanks, guys. Just give us a minute to settle down. Fantastic. So just wanted to thank those of you who've stayed around this afternoon. Hopefully, we should make this panel interesting enough for you. My job is pretty easy. I've got 4 very bright guys on this panel with me. And we're going to try and use the next hour to talk through the future of loyalty in India, as well as the innovative work that folks are doing across different verticals. When we were putting the panel together, we had the opportunity to try and identify different sectors. So we've got folks from the travel industry, from the retail industry. We also have a point of view around the one of the other alternatives to payback in India, and we'll talk about that as well. Some of the other coalition programs that may present themselves in the future. So what I'd like to do is maybe just have the panelists take a couple of minutes to just give us a quick snapshot of what the last year was like. We just come out of a kind of a wishy-washy year, but it'd be interesting to get a perspective of what the last year was like for their business, how was growth in their particular category, and then we'll dive into the discussion after that. So, Abhijeet, after you.
Thank you, Rahul, and good afternoon, one and all. I'll just briefly would want to introduce what Capillary Technologies is. So we're basically a cloud-based software solutions provider which help our clients to intelligently engage with their customers. And we do that through all the possible mediums through which you can connect to the customers, whether it be online, whether it be in-store, or whether it be through social, or through experiences like tablet, etc. And we're very strong in the retail space. We have over 70 plus clients in India. We're working with brands like Raymond, Puma, Nike, Benetton, part of Madura Group, which includes Peter England. We work with Pizza Hut, to name a few. And we have a very strong focus on analytics. So we have a software which basically is integrated with the point of sale system of the retail clients that we have. And the data that we capture is a very high quality data, basis which we can do a very deep dive analytics and come up with recommendations which really help to drive our retailers' sales. And we not just drive sales, we also help them optimize their marketing cost, optimize the product strategy, pricing, basis the consumer data that we collect. So we basically marry the consumer data with the purchase data, with the product data that the retailers provide us, and to bring all the big data analytics pieces into the picture and help our clients drive value. As Rahul pointed out the question in terms of last year we have grown really well. It was a pretty good year in terms of where we were some 4 years ago when we started off in the year 2008. A couple of guys from IIT Kharagpur were the founders, and we got started. From there onwards to basically grow to an organization which is 300 plus employees today. We recently got funded by a couple of pretty strong PE funds, Sequoia Capital and Norwest Partners.
Never heard of them.
Yeah. Yeah. So that's been the year, and now we're live across 10 countries, and we have more than 100 plus clients. Our software solution is basically working at close to 10,000 stores across the globe, and we have 50 million end consumers on the platform, which are basically part of the program, and we serve our clients this way.
Hi, Accentiv is India's largest service provider in the loyalty and the reward space. We provide solutions in the ERM space. ERM is Employee Relationship Management, CRM space, and PRM, which is Partner Relationship Management space. So we have been in the country for the last 12 years. We are part of the French group Edenred, which most of you may be aware of, the ticket restaurant and the ticket compliment vouchers, which is the other business which we have in India. So we have pretty much all the major banks as clients. We have ITITES as clients. We have petroleum clients. We have retail fashion clients. And today, one of the spaces which we are seeing where a lot of growth is coming in is the employee relationship space, because companies are wanting to retain their key talent. and hence that space is growing in a big way. 2012 has been a very good year for us, because typically years where there is a recession, loyalty companies traditionally do well, because most marketers want to retain their key customers, and hence the spends are on retaining their customers rather than on acquiring customers. So in that sense, 2012 has been a very good year for us. Going forward, we are looking at a whole range of innovations, which we'll talk about probably later.
EMEA, give you a quick background, is the world's largest loyalty management company, listed on the Toronto Exchange, about $2.5 billion. We run other people's proprietary programs, and we also run our own branded coalition programs around the world in about 20 countries. Like Ashok said, last year has been good for us as well, because marketing budgets move from more ATL to BTL and more measurable, and one-on-one communications with customers, promos that go directly based on analytics on spends, which is where we really come in, which is relevance marketing. So globally, we did a bunch of things other than sort of growing at a 20% on our bottom line. We're spreading the map. So we've done a joint venture with China with China UnionPay. We entered that way last year to launch a coalition in China. We acquired one of the largest marketing companies in Indonesia, and we upped our stake in Aeromexico's FFP program from 24 to 49%. So those are big global things that we did. In India, we announced a joint venture with the Tatas to launch a coalition in India under the Nectar brand name, which is our UK consumer brand. And we launched our proprietary business in India, and we offer managed services, soup to nuts, from program design to implementation to rewards and we currently run it for Taj Hotels, for Axis Bank, and Stan Chart in India as some of the big names. So that was us.
So I'm from Jet Airways. So how many of you don't know Jet Airways? So simply, I wear two hats as the head of marketing for Jet and as the founding promoter of Jet Privilege, our frequent flyer program, where we have already announced it, that Jet Privilege as the frequent flyer program will be spun off into a separate entity and then grow that business into a coalition loyalty program. Last year, very tough. As an airline, we are doing our best to kind of stay above the water. Challenges far too many, but we have a goal and we have some vision in terms of how we want to restructure the company and realign certain things, and spin-off of FFP into a separate venture is part of that strategy.
Great. So actually that may be a good transition point. So there have been some spin-outs of frequent flyer programs globally which have been very successful. Can you just give us some perspective on what the future holds? You've also had a recast of your card partnerships where you've added many more partners. What's the thinking behind that, and how's some of that going?
So the thinking is very simple. Over the last so many years, we have built the program. There's substantial equity which is there in the program, as well as the program works for Jet, and we have done full circle. We as a company believed in the program. Then due to cost pressures, we didn't pursue the program in the great way. So we devalued the program and the currency, and then saw the effect of it. And as part of overall restructuring, then we realized that we shouldn't be doing that, and we tried to re-engage with the program. So in the last 2 years or so, what you are seeing is basically a firm commitment to stay engaged in the program and to create more valuable program separated from the airline, bring about transparency in the way the program is managed. And we believe there's an opportunity for this program to be the key anchor program for the coalition loyalty in India.
Interesting. So you guys must be sort of being heavily poached on by a couple of folks in the room to be potentially partners. Have you already committed to any of these existing coalitions, or it's still a work in progress?
No, we haven't committed to any of the partners at this point of time.
Okay. And so, given that, you mentioned it was a tough year for the airline industry, how do you justify, continuing to spend? And, did you see any behavior shifts as you managed yield on, on the business?
So, very good question, and that was the business case for the management and the board to approve the strategy. Very simple, we used the historic data of last 6-7 years, and at different snapshots, 2005, 2006, 2007, 2008 we kind of removed it, and 2009, and we measured on 3 parameters: customers who are engaged in the program, customers who only fly, customers who fly and do partner redemption, or partner accrual, customers who fly, are active on partners and also do redemption. From churn rates, 23% drops to about 2.5%. So a customer who is active and engaged, is redeeming and is partner active, the likelihood that he would stop flying and will stop appreciating the program or would stop using the partners is about 2.5%, from 23%. That was a simple business case.
Interesting. Great. So, Vikas, you're obviously, Nectar is obviously a very successful play in other parts of the world. Can you just kind of give us a sense of your learnings as you think about trying to build, coalition versus proprietary? Is there a special flavor for India as you think about coalition programs? Does there need to be one dominant partner and then everyone plays ball? What's the secret sauce about building a great coalition program?
So India, because of the construct of the market and the fragmented consumer spend, does have a different model that we believe will work for India. One cannot discount the leverage that you can draw from a anchor partner that comes in, and the rest of the coalition sort of forms around it. We believe the Tatas are that for us. Having said that, so they aren't one brand with one retail store which is as big as what you'd see in the West, but they bring the breadth through 14 consumer brands that participate in the program. Other than that, we also believe that the program is going to be different in terms of the way you leverage technology to use in terms of developing consumer communication and contact and engagement. So a large part of our programs globally are very heavily card-based, and that too credit card-based. And we obviously, the credit card penetration in the country being low, that's obviously not the direction that we are particularly banking on. So a lot of E and mobile and all of that will be a difference. And finally, I think the third key difference we see is that the rewards globally are largely airline-led. So a lot of people essentially are accumulating miles for holidays. And we believe that in India there will be a healthy mix of airline and non-airline rewards, where people will never actually, a segment of the population will never accrue as much points to redeem it for an airline ticket, but will have smaller wins that they will go after.
And sorry, when does the program go live? Have you announced this?
We've not announced it. We are looking at end of the year.
Okay. Got it. You also mentioned, that the focuses are not, credit cards, but other forms of identification. We've been seeing on the startup side, lots of companies trying to use the mobile phone as sort of the anchor identity. Are you seeing any interesting lessons from the use case of, showing up with your phone, establishing identity, doing some couponing in real time? Are there any things that you can share with, your other market experiences?
No, absolutely. I think the buzzword that you're aware of is Solomo, right? So a lot of engagement on social, local, and mobile that we're seeing globally. To give you an example, we launched a Nectar iPhone and Android app last year. 50% of the customers in UK today interact with Nectar through the app, and the couponing is given real time in the app based on GPS location. So you're actually delivering what sort of the holy grail of marketing was, right time, right context, right person, right message. And our conversion rates are in the range of 20%, which is astronomical when you talk about direct marketing, the global industry being in 1 to 2%. So a lot of engagement happening in store, also on the mobile. There is, we're doing some very interesting stuff where we're linking also online to offline, where what we do is we look at a purchase behavior of a customer offline. We look at his demographic profile. We look at his online behavior, because in UK you can earn points if you search on Yahoo. Yahoo actually gives you points, Nectar points, to just run a search on Yahoo versus Google. So what
desperate
we do...
times for desperate measures, right?
That's right. So we can track online behavior now. So what we're doing is we're then taking that same profile of a customer, looking at online behavior of other customers, extrapolating what that customer could buy in store that they're not buying, and giving them an offer offline. So very interesting connect, which is one of the first things we've seen around the world in something that you connect online and offline in such a real-time manner that's being useful. And thirdly, on the social bit, there's a lot of non-points-based engagement that's happening, which is all about the community. So we run, for example, Coke Rewards, My Coke Rewards globally, which is a program. You do earn points, so you have a barcode on your can which you can go online and put in and earn points. But that's not really the game. The game is that you have a Coke app, essentially, on your phone. They give you all sorts of funky messages and games and all of that. And the engagement is when you tweet stuff, you earn points. And the best tweet gets featured on the big displays in Times Square, right? Stuff like that. So that's where you're seeing a lot of social engagement. And we've actually made... therefore, Coke Rewards online, we do this for P&G, for their diapers business, amongst the most visited FMCG sites in the world. And that's how they're building loyalty in that space.
So Ashok, actually this takes me to a point you mentioned around channel management. You used to think that the decision to buy a Coke is one, once you've built affinity to a brand, you're not going to go buy Pepsi. But you talked about how you can actually use programs to change buying behavior in the field. And you've worked on specific campaigns where the channel is influenced by the programs you run. Give us a sense of how that's going, because India used to be a distribution-centric market, right? As long as you put product out there, you'd win the game. That's changing now, right? So how are you changing the dynamic of rewarding the channel, and what are some of the lessons learned?
Given the customer literacy in India, what's happening is we find that channel continues to play a very significant role in the customer decision. And there, when we talk about channel, it is the sales guy at the counter who is really making that difference. So we find that typical categories like mobile phones, for example, even apparel, for example, multi-brand apparel stores, for example, it is the guy at the store who is influencing a decision one way or other, especially mobile handsets, because people just have a price point in mind. They don't have a brand preference when they go into the outlet. So we find that it's important for this guy to be incentivized and to enable him to push one brand versus the other. So there are mobile phone companies which are now launching programs for these sales guys at the front-end store. There are liquor companies which are launching programs for the guy who's at the front end. There are even pesticide companies who are launching programs for multi-brand pesticide shops to influence one brand versus the other. So clearly, at the point of sale, the guy who is capable of swinging the deal, he is going to be incentivized going forward. And I think over a period of time, this is going to become a trend because India still has a large number of multi-brand outlets, and that's going to be.
So, if I'm a retailer, will I let you come in and influence my employees and sort of do programs independent of my own systems?
The way it is positioned to the retailer is, here is an opportunity for some of your employees to earn additional revenue. And in fact, in some cases, what happens is it allows the retailer to pocket all the other marketing money which otherwise the brand spends at the retail outlet.
Got it.
And hence, for example, car loan companies, when you go to buy a car from a car showroom, typically they have tie with 2-3 car loan companies. So it's again, the salesman, the car salesman is different from the bank car loan salesman. But the car salesman can influence you towards one particular car loan company, saying that the processes are much simpler, and hence you prefer that over the other.
Interesting. So Abhijeet, you're at the kind of in the holy grail of sort of real-time marketing and integration with the POS. What have been some of the implementation challenges in India? Right, there's a lot of fragmentation in the last mile. You've tried to put your technology in literally at the point of sale, which is a very difficult piece to integrate. What have been the lessons learned, and how you sort of seeing the market change going forward?
So initially when we got started off, the biggest challenge we faced was how to marry the transaction of the customer to customer's profile. That was the biggest challenge, because most of the point of sale systems in India don't have a customer field information tab. So you cannot link the customer's transaction history, or they don't have an engine backing which can do a points calculation or can do any analytics on the point of sale. So that was the first thing which we initially identified. To solve that, what we did is we integrated with most of the point of sales in India. So whether it be RPro or it be Shopper or it be Genie or be Navision. So we got integrated with all these point of sale. So now we are integrated in 20 plus point of sale we are pre-integrated with. So before we go live with any client, we actually know that we are integrated with them. So once we do that integration, the rest of the story becomes easier. You basically have mobile as a unique identifier and also as a primary mode of communication for identifying the customer's loyalty, identity, and also to communicate with him in future. Second challenge that we observed was in Indian context was training issue, because finally at the end of the day, store cashier is the guy who is using the software. And for him, he's already making transactions in point of sale. And he's already learned his lesson in terms of how to use it. So anything new you give to him, there's a challenge to it. Right. So what we have tried to do is keep the interface really simple, keep it minimal in terms of minimal work required at the cashier level. So in some cases, we even have a backend integration. Wherever we have a front-end integration, we ensure that in the first visit of the customer, we just capture name and mobile number. And then in his repeat visits, we start building up his customer profile. So a customer, when he walks into the store second time, will ask for his email ID or an address or say an occupation or anything else. So to keep the effort minimal, that was a learning that we learned at the point of sale level.
So, but you have no single view. So if I have a number and I go across merchants, Capillary doesn't have a single view that belongs to the merchant specifically. So if I'm Raymond's, my Raymond's transaction history stays at the Raymond level.
From the perspective, you have so many platforms to reach out to customer, maybe mailers or emails, and with increasing technology, probably you're reaching a tipping point where the customer will say, that's enough, I don't want it anymore. So how do you address that solution as an industry?
I think many of the speakers talked about the relevance of the communication. I think end of the day, the relevance of the communication is what is going to drive it. And second is, going forward, the customer will definitely have the option of choosing how he would like to be reached out to. Would it be email, would it be mobile, and how many times? I mean, I'm sure those sort of, where the customer designs how he would like to be reached would come in. But as of now, even though a customer is member of multiple loyalty programs, and almost all these programs keep sending out messages, we find, for example, in some of the apparel programs which we run, so long as the message is relevant, so long as it is giving a very good offer, I think Vijay showed some graph as to where the tipping point is, and so long as you have understood the customer well, the segment well, and hence you are giving it at the right time, we still continue to find that the response rates are very high, and it is actually contributing to the ROI for the loyalty program. But yes, probably we are moving towards the tipping point of which you are talking about, and the natural evolution would be where the customer is given the choice of how he would like to be reached out.
I think I'll try and address this question in a different way. There are roughly about 150 plus odd proprietary coalition cluster programs which exist in India today. Now, if you take the total population size of the number of customers who are there, we are talking of not more than 35 to 40 million unique individuals who are being addressed today. The market size is much bigger. I think how do we get more engaged with the rest of the customers and make it more relevant will be the key challenge for all of us in the next few years to come. Then the challenge will be those who are engaged, they are engaged purely because they believe in that currency. So if you send a communication, the engaged customers do open. We run campaigns to our customers, and open rates and click-through rates are in excess of 20%. So there's fair amount of engagement. So, and customers always do have a choice. If they don't want, they can obviously opt out.
So, funnily enough, every time, there's a problem like that, there's a smart entrepreneur. So we saw a company that's sort of building an offer inbox, if you will. So you can give a dummy number and a dummy email, and it consolidates all the offers from all the merchants. And so you now have one offer inbox, and when you have time on the weekend, you go and spend time on your offer inbox. So we don't know whether that company will get funded or not, but there are people trying to make an opportunity from this.
Just to add to the point which Rahul mentioned and what Manish was mentioning, nowadays one more thing which has started happening, and we follow that practice when we communicate to any customer through an SMS. We put a statement at the end of the SMS to opt out from receiving this communication. You can give a missed call on this particular number. So the customer always has a choice to give a missed call on that number, and he'll be opted out, and no further communication will be done to that customer.
Great. Any more questions? Yeah, go ahead.
Since you guys are also offering a service and not just a technology, have you guys also experimented with providing your solutions and services at an SMB level? Because most of your customers, Pumas, Nikes, these are like multi-store chains. There's a complete connect between the value you're providing. They have teams to manage this. And despite having teams, you're still helping service those accounts with account managers and whatnot. So what is your experience with SMBs? Have you tried, and what have been the findings?
Yeah, so we have been experimenting a lot on the SME side of it. What we want to do is we want to build a self-serve model, wherein, because we have a very strong product with us, which really help any retailer to build a database at a very quick rate in a very cost-effective manner. We have built a very custom BI CRM tool. So all the analytics which I was talking about during the panel discussion so far, we've built those insights as a standard query or standard reports into the BI CRM tool. So even that CRM tool has an access which can be given to any of these SME players. So you don't need an account manager to help them. And further to it, what we have done is we have integrated this BI CRM tool with the campaign module. So even if these SMEs, if they want to do any campaign on their own, they don't have to give a call to the account manager or send a mail to our team to execute that SMS or an email campaign. They can import any filters they want to apply in that BI CRM tool, import it into the campaign module and execute it on their own level. And they can actually prepay for the SMS credits or the email credits they want, and which is topped up in their campaign module account. So there's a product on which we've been working for last 1 year. We just want to figure out in terms of how we want to go about selling it. So the channel sales is something which which as a part is what we are developing in terms of how to reach out to the SME space. So we're taking cautious steps. We have few clients in Karnataka mostly, because it becomes easier to serve right now and analyze and then basically take the product to the pan-India level. And we have seen good response in the regional level we have started.
Any more questions? Back there.
Hi, my question was for Vikas. You mentioned about how Nectar is using the online behavior and trying to marry the online and the offline behavior. And part of the questions here have been around fundamentally saying push communication beyond a certain point is not going to scale. So just curious if you've tried that behavioral component to try and use some pull-based channels for actually trying to push communication or campaigns to, as a part of the Nectar program in the UK. So fundamentally, trying to use that behavior and push subtle campaigns rather than actually trying to push it down the customer's throat.
If you're saying, pull versus push, we've found it very hard for customers to build engagement where you are going to ask them to actually go in and pull, right? So there are lots of companies you'll see who have technologies and offerings where you walk into a store and you ask the customer, you pull up your app and then you ask for offers in that store and then you try and redeem it, which is, asking for a pull. Doesn't work in our experience. So the best way you can sort of get a push communication and deliver it with the effectiveness of the pull is the right timing. So, use the trigger point of a transaction. One classic example that is prevalent in retail in the Western world, which we use as well, is Catalina, which is essentially coupons at till. So when you go and do a checkout at your grocery store, based on your previous purchasing history, we would have identified offers that would have made sense to you. We'll actually look at your bill at that point in time and give you an offer right there and then. So if you've bought, yet another 6-pack of Coke, for example, and we've got an offer from Pepsi and we think you might have propensity to switch, when you actually pay, you'll get that offer saying, look, if you actually buy Pepsi instead, we'll give you double the points. So that's how we find the answer to tackling that problem.
All right. So I just want to thank these gentlemen for a fantastic panel. You heard it first. Indigo is going to launch a loyalty program.
I'm not saying that.
Nectar goes live this year, hopefully. Real-time coupons, real-time redemption, and lots of more fun stuff for us as consumers thanks to Capillary. So please join me in thanking this panel.